Hello guys, welcome to Pivotal Traders. If you haven't subscribed this channel yet, hit the subscribe button and also post your valuable feedbacks as comment. So what I'm going to talk about today is the gaps. How gaps helps you identify a certain good resistance or support points, and also it helps you to brain tattoo yourself and to think in a certain way, and you create a kind of mental structure. Okay, you create a kind of mental structure around the gaps, but yet you fails to do that. So I will be coming to the today's price action movement, that is 23rd of July. But let me just go back how gaps behave in a way, in a fashion which we always fails to trade upon and also get scared about it. So why markets create gap? Okay, so there is a sense of sometimes urgency. Okay, so what urgency is there? So urgency of price movement. Urgency of price movement by whom? By big institutions. So what we see here is the creation of a gap, and then we see that the gap was spending some time around its high and then creating another kind of an island here. Okay? And then it made a gap down, filled the gap, and then spent some time around it and then continued to move higher. What is it telling us is that sometimes the gaps are more urgent. Okay, nevertheless, even if the gaps are more urgent, market doesn't like gaps, market doesn't like the blanks. It always strives to fill the blanks. Now in the process of filling the blanks, it makes a sense of confusion, and the gaps are always satisfying to watch and satisfying to wait about it. What we see here is that a gap creation did occur here. Okay, a gap creation happened here, and we see that in order to hurriedly fill the gap, the market did give some reaction on the downside, and the reaction on the downside was so much violent that it was now creating gaps on the opposite side. Okay, this signifies that some kind of urgency was there when the market was moving from here to all the way over here on the upside, and some kind of urgency is also there when the market is moving on the downside and continuing its gap. Now one thing is sure, that these blanks would be filled in some point of time, and we have to identify a particular time horizon where we are trading, and we have to look for it when the gaps would be filled, and whether the filling of the gaps would create a reversal or trend continuation or would lead to a sideways movement. Let us just go back a little bit more further. So here we see a gap, a very small gap created. You see, very small gap was created here, and this gap was quickly filled. The moment it filled it, the market was so much bullish here. Okay, so much bullish here, it made a double top and then made a low and quickly filled the gap. As soon as it realized that the gap has been filled, it tried to lift the market on the upside. Okay, so this has happened. The market would always strive to fill the gap. Now let us find more examples. So as you can see here, market did created a gap, but this gap was not so huge and the market was not paying any heed to it. But on the other side, as you can see here, as you can see here, a gap was formed here. So this gap was of almost 150 points or so. So this was a very important point for the market. So this gap was tried to be filled all the way after doing all this drama around the market, all this drama. It came here, spent some time. It for the first time it happens that it gave a reaction of almost 200 points on the upside, but it tried to spend some more time around it, tried to have a normalcy where the price acceptability increases around this level. And yes, that's what happened here. The price acceptability was attained, then it made an upside move. Now, what has happened today? Let's just watch that. We had this situation, and I know many of you must have blown your account because many of you was expecting that the market has crashed. How many points? Market has crashed to almost 1600 points or so. We can assume that, and you might have expect that any fall on the downside would be a trend continuation on the bearish side. But you see what has happened today. Market on the 20th of July created an upside gap. This gap was expected to be filled, and you see here there was a failed auction. A student can relate to this, what I mean by failed auction. So here you see a successful auction happened here, and the gap filling also happened. So two things simultaneously happened here, and the gap filling also. And the moment this gap filling happened, you see such a large candle. Let me just get you here. So the moment you saw this candle, where the first candle was kind of a indecisive in the morning, the first candle was indecisive, okay, and the following candle was a bearish huge bearish candle. It's bearish in a sense that there was no upside move at all. It was complete bearish all the way to the down, but it did make some tail. It made some tail around the gap filling area. When we see this at a hindsight, it looks very easy. But when we were in the trade, this would have been seen as just a trend continuation. How? Let me just show you. The people, they must have drawn this line here, and they might have thought that this is a trap here, trap kind of situation, and they got trap here. Again, they're thinking that there was a trap kind of situation, thinking that they are getting out of the trap only to land into a trap situation. So that happened here. Gap filling happened as soon as the market completes its cycle of gap filling. It started with a bang, and the bang was this complete bullish candle, and this bullish candle was just negating the factor which was created around this level. So a consensus was signified here by the big institutions, and it was sold at a cheaper prices, and you all bought into this dream of the market structure. The belief of having the gaps filled and then waiting for it to mature did not materialize here, and your brain did not function to act this gap as a legitimate one until unless if you would have just waited for another 15 minutes candle. And some of you might have done that. They might have not traded till first half an hour of the opening session. You see that even after this big red candle here, we have a bullish green candle, and that was not just it. The following candle was continuing the momentum which was created in the previous preceding candle, and continuing with such a force that was creating a higher high within the intraday range. So this was the power of filling the gaps. We had a view, we had a belief, we had an attitude, and many of the option sellers, they had an attitude that yes, this is a gap filling area, and they might have done their all kind of trades. They might have taken straddle or strangle, whatever. But the only thing is which is meaningful is that the gap filling was respected, and had it been the case that you were just waiting for this to mature, you would have earned a decent amount of money. So that was what I was signifying here. Now, what are the takeaways? The takeaways is that you have to have a belief. You have to have a belief about the gaps. I'm just particularly talking about the gaps here. I'm not talking about any other system, because what I believe is that price action is in itself a very sound system. So you have to have a belief, and you have to restrain yourself until the things become clearer. Okay, you have to restrain yourself. You don't have to jump into the trades always. You have to restrain. You have to define your risk first. If you're into option selling, then definitely the reward will follow. It is more easy. And yes, the most important thing is the position sizing. So if you have a mental structure which is created using these all these four ingredients, then you would have a more stronger mindset, a more stronger mental structure to trade the gaps. So that was it, guys. I hope you like the video. Do comment, subscribe, and like the video. Thank you.